Good morning, guys. Welcome to this Tuesday, February 25th, last trading week of February. We have a couple of days. Friday was a nice sell-off day. It's nice. It's a rough day, sell-off day. Yesterday was another one. Not easy at all. They just laid into it again. And you can see the overnight, no bounce back big to talk about in the overnight. Actually, a bit of weakness. We'll see. They're down here against these lower edges now, the below the 6,000, right? The 6,000's working it. So I just get the sense that it looks like you're selling off into the end of February. So we may have more to go. Now, we do have a NVIDIA earnings coming out tomorrow, I think. Is tomorrow Thursday? I think it's tomorrow. And that's going to be pretty anticipated. But I'm thinking that we may get more weakness today. Yesterday was one of those days. If you're going to be a one-off Friday sell-off, then we'll probably see recovery Friday to Monday here. But no recovery to talk about, further weakness. And as such, you just kind of had to assume that the trajectory, the bears are in charge for a bit. We'll see how far they can take it now. In the news this morning, we have nothing at 8:30, but at 9 o'clock we get housing data, Case Shiller and FHFA. Consumer confidence at 10. A couple of speakers. We had one in the morning here, but we have speakers at 11:45 and 1 o'clock as well. A 5-year auction at 1. 5-year auction, remember the short-term paper is what they've been funding most of the stuff on. So 3 and 5-year auctions are actually pretty important. So let's see how that is. So pay attention. 5-year auction at 1. It could potentially give us a reaction, but I'm thinking today's trading is most likely going to be dominated by the potential follow through or more net selling, given whatever is driving the market now. in terms of um, in terms of weakness. I haven't been able to put my finger on it exactly. It feels more like just they decided to start selling off. There's so many different things going on. I mean, some people they lean on the tax cuts not happening. They build in the House and the Senate, the issues there. Some people are talking about tariffs. Some people, I mean, you can always find something to hang it on. It's just question is if that's really the case, you know. What we are seeing is weakness, and I'm not seeing any lift. So I'm going to start from the short side of the market. And I'm going to look to sell strength up to that 6,025 level for rotations back down again. And then let's see if they can push these levels lower. So at that point, yeah, so at that point we'll see if how much weakness we're really going to get. So looking for some early strength, looking to get short against that 6,015 level, 6,025s. If they trade above 6,025s, I'm going to take off the short bias and go back range bound. I think that's when we're back up in this upper range again. And not unless they take out that 45 level, I'm going to be starting to think and maybe have a shot at retracing this to the upside. So remember, these 3 levels here, or up to that 45 level, that's just this area congestion here from the 6,020, 25, or it's like 6,015 up to the 45s. It was a pretty good resistance on the way up. It was pretty good support on the way down. And at this point, looks like we are reverse retesting it now. We took it out and we're trading back up, reverse retesting those levels right now. So they're going to be resistance, and we're going to be looking for short setups against them. So looking for short against the 6,015s, the 25s up to that 45s. There may be an edge in between here. This ledge direct could turn into something. I did not mark it up. I had something there, but given the trading back and forth yesterday, I'm thinking that may have mellowed out a bit. We'll see. But that could be, well, maybe let's put it back on again. Since I'm talking about it, just this level right there, this ledge right there. That could be a level. It doesn't really show in yesterday's trading very well, but it's worth paying attention to, because you never know when a prior level turns into something important. You had a little bit of a volume edge there, so I'll to lean again. So let's put in the 35s as well. So 15, 25, 35, 45s for rotations back down. And as I said, we are leaning short or leaning towards the short side of the market. So no reason to be aggressive getting short against them. We'll see they run up here. We'll see which edge is going to hold. And and if they for some reason get up above the 45s and start squeezing, then then we may have to go back. We are going back range bound, but we may have to start considering a long trade there to see how far they can squeeze it on the upside. But I'm not going to be worried about the long side of the market. If they start taking out the 45s, that's when I can start thinking about that. I'm not going to be looking for the long trades until we really take that out. So looking for early strength to get short against the 15s, 25s, 35s, 45s. It could be very short-term type long setups on the way up if they depend on how far they're going to take it. But I'm not going to be very aggressive on those trades. I'd rather be patient and then watch the resistance area for a potential short setup at this point. If they start heading lower, looking to buy against the 59.95s and the 80s. That's about it. I'm not going to be very aggressive about that as well. I think the better support. I mean, you can see here we're gonna get down here to 59.15s. So 5900 to 59.15. That's when we get the good support, and that's another 100 points lower. So that could be a very much what's in store for us. So the next level of support, which may not be so strong, is at 59.50 to 60. That area, this is a small attractor right there at 50s. Support from that prior distribution. So that's going to be first level of support. The best support comes down at 59.10 to 15. So those two areas, but we'll see if they're going to start squeezing this to the downside or not. So anyone's guess, right? Anyone's guess. But man, yeah, really worth doing a number on it. So let's see how far they can take it. All right, so that's the ES. To get started, looking at the bonds and the NASDAQ. Bond market, flight to safety. Look at that thing skyrocketing overnight. So that is kind of surprising, but it's surprising and a little bit concerning as well. Yields is spiking. No, not the yields. The prices on bonds spiking, yields coming down. That's what it is. So you can see here, move out of the middle. They started a little bit. They squeezed a little bit yesterday, and now they're continuing, and they're taking out the 117s. And as such, they can trade back up here. They haven't been this strong on the prices for a while. So yields coming down, dropping pretty good. And that's going to be helpful for stocks, but this could be just a function of flight to safety. In other words, net buying, rolling equities into bonds, and then basically driving out the prices. That yield is not going to stay down just because of that. So when people take out that money off and sell their treasuries, then it'll come right back down again. So or the yields come right back up again. So just to get those straight, the prices go up, yields come down, and vice versa. So at this point, but bond market, look at that big move to the upside, almost a full point to the upside in the overnight. And as long as they hold above the 117s, I mean, that's going to be a good shot at trading up here to this 118 attractor. That's still a volume attractor up here at 118. So looking to buy weakness, 117.03s, 116.28s for rotations back up. The buck is in between here, but so it's kind of diluted a bit. I chose to highlight the edges instead. But you have the 117 in the middle of this, so we're going to buy against the 117.02, 03s and the 16.28s. If they start retracing these single print case, I would hop on a short trade for rotation back to that to the mean here. And I think they may retrace this all the way back down to the 20s at that point. So that's the bonds. We get started, starting from the long side. If they trade below that, it'll take out the 28s, then we'll shift our bias, take off the long bias, and look for a retracement back to the 116. 8 to 10s. NASDAQ, that's kind of some of the NASDAQ stocks has been absolute hammered now. If Nvidia comes out on Wednesday, yeah, tomorrow with a spectacular earnings report, and the market doesn't totally fall apart on that news, they don't disappoint. We may see that's the start of a recovery trade. So that could very well be what's rising, because that's a big part of the NASDAQ. If the NASDAQ starts taking off to the upside, oh boy, that could be they're going to drag everything with it. So we look out for that. We don't know how it's going to come out, though. If Nvidia disappoints, I think Nasdaq is going to see another pretty good move to the downside. So anything can happen. But at this point, definitely looking to sell strength. You can see capital flow wise, we are in some really backing off hard. So I mean, you can see here we were up at 22.2s not a few days ago. Now we're down here flirting with these support areas down at the 21.200s again. So if this keeps going, we may see tests of this support area down here. This is a pretty good support area as well. This is at the 2800 level. They've been down there. They broke out of that one back in November. Yeah, back in November. And so far we have been try to get up. So far we've been down once testing it, and then it retraced pretty hard from there. Then back down again, and then retrace back up again. But you can see here that we have this last rally up here has been definitely been reversed pretty hard at this point. So violent moves up and then violent moves down. So that's Nasdaq for you. A lot of volatility on that guy. But you have here a pretty good area of support at the 2800s. Right now the attractor is at 21,500s, and that's kind of where I think they maybe go back to for a reverse retest. But at this point, starting off on the short side, they're trading right at a big ledge at 21,400 right now. So looking to sell strength at this point. I was going to say 400s, but they're trading right above it now. So 450s and the 500s for rotations back down. It traded above 500s. I'm taking off the short bias and going back range bound, looking for a more of a move up here, more of a range bound trading session right here in the middle of this distribution. You can see how this big blob here of volume kind of frames the area of interest, right? So looking for short set, I really all the way up to 21,800s. Looking to buy support all the way down to 21,200. But buying support at this point, when we are in the move out of the middle to the downside, is going to be we're going to have to be a lot less aggressive on that. So we haven't stopped extending to the downside. So we're still moving lower, move out of the middle, stage one on the profile, and we don't want to be stepping in front of it very aggressively. So looking to trade this on the short side, looking for shorts against the 440 50s and the 500 to 510s here for rotations back down again. All right, so that's kind of if they get down here to the this volume edge right there at the 230 to 270s again, this volume edge right there, that could be a long trade could set up there. Again, just not being very aggressive about it, just waiting for the market to show that they're done selling. Because you saw yesterday how they ran over support in just kind of absolutely just annihilated support areas. So that's how we get started on the Nasdaq and see how volatile that's going to get today. And then finally, oil and gold. So gold backing off a bit and back down in this area. They not much of an overnight. They just been holding at this value area around the 29.50. So looking to buy weakness on gold. I'm going to start range bound on that guy. You can see how that's just not going anywhere. And it's not necessarily a bad sign. It's just a matter of trading it as a range bound market right now. They're trading at the range in around that 29.50. Pretty good support area down here at the 29.30s. Resistance up at 29.70s. And so far have not been able to break out. So traded as a range bound market right now, looking to buy weakness at this point against the 42s, the 35s down to the 30s. Looking to sell strength, 56s, 60s, 64s, 67s for rotations back down. Last one would be at the 72s. So just fade those edges back to the mean at this point. When it starts breaking out, you probably can hop on it, but chances are we may see a bit of retracement on that one, on gold. I'm not sure. I mean, they're pretty overextended. I mean, they run on gold has been pretty spectacular. I mean, we were down here. You can see here if I keep going low, we were down here at 2,600, $300-400 lower not too long ago. So they're pretty good extension to the upside. And so far the retracement has been a bit violent, but hasn't really taken us a whole lot below that 28. I should say this area, the 2,800s. So that has been support, even if it's a whole range here of not a whole lot of fairly equal volume, I should say. The lower edges really start happening after that 28.50. So below that where you find better support, but all the way above it, a lot of volume. So at this point, we're still starting this range bound. Capital flow is pointed higher, and the exchange member chart is range bound. So I would start off range bound. I would prefer the long side of the market on gold. Then on oil, backing off a little bit. And oil is going to be like that, right? It's going to be a little squirrely. That's gold again. Where's my oil? Oil, there it is. So still holding in this lower range right now, lower end of the range. You can see volume is kind of building a little bit higher than this in the prior distribution. It used to be down here, now all volume has kind of moved up a bit. So I would say we have a volume, the mode here is at 70s. The mean is like 71. So pretty much coming to balance on oil. And it's moved in the last administration, it's moved to the upside, it's been reversed. And now it's just a matter of when are we going to see some of these policies kick in and drive this lower. So I'm looking for lower oil prices and think that's going to happen. And we're only 4 weeks in, so give it a few more weeks. It'll start coming down. But the policy has been set, and they're going to do stuff to enable production of energy, and that's going to be good for all sorts of energy. So I would start off from the short side, or I would favor the short side. We have these little moves to the upside, which can certainly catch you. By yesterday, then up day. It didn't go far, but still an up day. And overnight traded high, and then they kind of just knocked it down again. So looking to sell strength at this point against the 70.75s and the 71.20s for rotations back down. Last one would be that 71.65 to 70s for rotations back down. So this one would be the last one to get short against for rotations back down again. But it's been moving kind of weirdly, kind of oddly. I say weirdly. Weirdly is like an odd term, but it has been moving kind of sloppy back and forth, so volatile. But there's a big reactions, then nothing, and big reactions, that kind of stuff. We'll see when we start getting a nice little trending day to the downside. That would be a good sign. But anyway, I would start range bound, slight bias to the downside on oil, looking to sell against these two resistance areas, the 70s and the 71.20s. And if the trade above 71.20 is the last one, I'm looking for short against this 71.60 to 70s up here. All right, for rotations back down, still thinking short side of the market on oil. All right, back to the ES. And so far, kind of where we left it, slowly grinding back up again. It's a little bit early strength showing. So we'll see how much that early strength can carry us. So what happens as the day session kicks in, if the algo is going to start creaming us again. We will find out. Alrighty, guys. We'll leave it there for now, and I'll see you back at 11:30 for the next update. So good trading. I'll see you back then.